Yeah, it's basically JP Morgan versus Morgan Stanley, Kathleen, and it's all about when the Fed's going to pivot.
Absolutely. And of course, let's say they sort of represent two important blocks of views among Wall Street strategists, among Wall Street economists, Fed economists, and more. Let's start with Michael J. Wilson over at Morgan Stanley. He says the Fed is going to keep hiking and boosting recession risk because the sticky inflation is keeping the Fed very hawkish. They're going to hike right into a recession. He doesn't see a bullish stock signal. In fact, Morgan Stanley Wealth Management saying that this is delusional, that the stock market rally is going to keep continuing. But Mislav Majetka over at JP Morgan Chase is saying inflation's going to peak. It's already started to peak. The labor market's going to start softening. The Fed's going to pivot to a more balanced policy. And ultimately, stocks are going to do better in the second half of the year. So let's examine this just a little bit. Let's talk first about recession. Because if you look at, this is the way you gauge recession, guys. National Bureau of Economic Research. You're going to see this a lot as we talk about recession. Their indicators don't show a recession is imminent. They're looking at incomes, jobs, industrial production, and various kinds of consumer spending. But you know, if we think about where the inflation is, well, is it peaking? If you listen to Loretta Mester from the Cleveland Fed, we were speaking to her just a couple of weeks ago. She said what she has to see to stop hiking rates and pause would be inflation not just peaking, but coming down sustainably month after month. And it can't just be the headline or the core. It has to be both of them. So I would say if I had to lean towards anybody's bet right now, I might lean toward Morgan Stanley. So we'll see. In fact, we'll get some more signals from the Fed in just, as you said, Yvonne, what, 36, 48 hours.